This video is sponsored by Noragon, the commercial vehicle data experts. Visit noragon.com to learn more.
It's been a wild ride in the 2020s so far for the commercial truck market and, frankly, everything else. The extreme ups and downs of the market seem to have settled down, so where does that leave us? So far, orders have been solid in 2024. FTR's latest reporting says that OEMs continue to fill build slots at a healthy rate, with Class 8 orders for the past 12 months totaling 267,700 units. Looming over all this is the forthcoming GHG regulations in 2027, which are bound to have a significant impact on the market. Joining me on the Road today to talk about that and what we can expect from the truck market in the second half of this year is Eric Starks, FTR's chairman of the board. Let's go to the interview. All right, so today on the Road we have Eric Starks from FTR. Eric, thanks so much for joining us.
Oh, thanks for having me. It's such a delight. I love doing this kind of stuff.
Oh, that's great. I wanted to ask, to start off about, just the state of the market. We're going into the second half of the year. What can we expect?
Yeah, so there's a couple different ways to think about the market. So it depends on where you sit. And if you talk about the economy, the market right now is okay. We continue to see a economy that is growing. We have not stalled out yet. I think there's this thought that people thought we were going to be going back into a recession. That hasn't really happened. It has been a traditional soft landing. Whatever the heck traditional means anymore, I don't even know. Post-COVID, everything has kind of changed. So things that we thought we knew before no longer are valid. And so we have to reevaluate some of that. But if we look at things like jobs growth, that has been very robust. We've actually seen inflation easing back a little bit. It's not back to the level that the Fed wants to see. So we still have a ways to go. So there's kind of this pressure that's there that says we want to slow down the economy a little bit. We want to keep pulling that back, but it continues to grow. So when we then take that to the next step and we talk about what's happening in transportation, well, the market has been kind of just there. It has finally settled down. We've kind of hit this plateau where we're just kind of sitting and things have just been rolling along relatively flat. And that's okay. So, but if you're talking into the equipment market, well, the equipment players, things are getting a little bit dicier just because they're trying to readjust. There's a lot of inventory in the cycle. So there's just some different things depending on where you're sitting in the market. But all things being equal, things are still doing okay.
Yeah, that seems to be, kind of what we're hearing and what the numbers are saying. If this term makes any sense for the truck market, it seems like an average year, pretty standard.
Oh, yes. I keep going back to we are renormalizing. So, It's whatever normal is, we're getting there.
Right, which after the last few years is pretty good relief.
Oh, it totally is. Because, everybody economists won't use the term recession for the pandemic. And I think that is true. It was a shutdown. So we have never in our lifetime seen this type of an environment, seen some type of a shutdown. So this has been basically a restart. Once you restarted, then it has to figure out how do we kind of get back to some type of normalcy. And we're there. That's the thing. It's the big issue I think a lot of people were concerned about is if it eases back too far, what happens? And the one thing I will add then too is the Federal Reserve does not have as much juice to be able to pull the economy down like it used to. So it actually ended up being a good thing because they can affect it, but they can't change it quickly. And sometimes that's okay, because when we saw the 70s, oh my gosh, it was just an up and down. And now it's kind of been more of a soft easing back. So I don't think they'll touch interest rates until after the election. There's just no need to do that. We're getting close to the point anyways where they want to stay away from the election. And so I think it's pretty much a done deal that we don't see them move at least till the end of the year at the earliest.
Yeah, so when you look at how things have gone in the first half of this year so far, how is it compared to what you guys expected?
It actually has kind of been right in line with our expectations. If anything, things have been a little bit stronger. So again, it depends on the angle you want to take. When we talk about the economy, it's definitely been a little bit stronger than we thought it would be. And so we continue to move through the balance this year a little bit better. Our freight numbers continue to keep moving higher, but in general, though, it's not going against the tide of what we anticipated. The industrial sector drives the freight market, which impacts equipment demand. And so all of that suggests that there has not been a huge amount of movement there. And so we've been really paying close attention to those particular sectors, specifically what's happening within the industrial sector, because that's the bulk of freight that's out there. And so that's been relatively flat. I mean, you've seen automotive picking up and doing fairly well, but you've seen other sectors still somewhat weak. You've seen a little bit of weakness in pulp and paper and in lumber. So there's just differences in segmentation that impact the markets differently. But all in all, it's relatively flat to slightly up as we start going forward through the balance of this year.
That's not a bad place to be at all.
It is not a bad place to be. So. Again, it just kind of depends on where you're sitting, and maybe Alex. So let me throw it to you. Okay. Which hat would you like me to put on? Right? Am I a trucker? Am I a shipper? Am I a manufacturer? Because then we can talk about it in how that impacts them a little bit differently.
Okay. Well, I don't know whether you have this hat in your closet, but. How about from the perspective of the fleet managers?
There you go. Perfect. Yes. So the fleet managers are, they have enough equipment right now. They are trying to say, can I make sure that I have drivers to put in those seats? And the short answer right now is yes. So one of the things that we saw during the pandemic is we saw a large number of owner-operators come into the market. And we saw them getting authority. That has finally started to shift. We've seen where they have said, you know what, I don't need to own my own company. And they have now started to become a driver for a traditional fleet. And so that has started to shift, but it's not to the level where we're back where we were pre-pandemic. In fact, we have more people out there as a driver and with authority than we have ever that we can recall. So if you put on your fleet hat there, right? So one, you have the equipment market doing okay. If you want to find equipment right now, you can. They are cranking out a lot of equipment. In fact, as we start going into the latter part of this year and first part of next year, being able to find equipment that you want is not going to be an issue. You'll be able to get it pretty much when you want it. So that's not a problem. The other thing then is, what does the maintenance on the equipment look like? How do you maintain that particular fleet? With the amount of freight that we're seeing in the market, you're not overly taxing these pieces of equipment, so you're getting back to somewhat of a normal replacement cycle of that equipment. So from a fleet standpoint, in that perspective, right, there's a little bit of you can breathe somewhat. And say, okay, great. Now, there is one thing that has happened recently that is creating some issues that we're unsure if it has percolated all the way through to the fleets. Is one of the major mirror manufacturers had a fire and has had a huge impact on the market. And so the ability to get potentially aftermarket and aftermarket parts could be constrained as we get going forward. And as we all know, you can't drive a truck without a mirror. So that can be a bit problematic. So we'll have to see. We know it's impacting several OEs for producing new equipment, but we'll have to see how that impacts the actual fleets on the ground and what that looks like. But it's something that people are going to have to at least pay attention to, and we probably don't see that resolved till probably the end of this year. Maybe middle to end of third quarter is a possibility, but I would think that will linger for a little bit of time.
Yeah, definitely something to keep an eye on there because, like you said, that is one of the more important components. You can't really do anything if you don't have those mirrors.
Yep, that's exactly it. Yep.
Yeah. So staying with, fleet managers and equipment, one of the things that's kind of looming over the market is the upcoming greenhouse gas regulations. 2027 is the next year. They're going to ramp up and become a lot more stringent. And a lot of fleets are looking at or starting to kind of plan around that and try to get ahead of it. So how do you see that affecting the market over the next couple of years?
Yep, so let's break it down into a couple different areas. One is the NOx regulation, and that one is pretty much a one and done. 2027 hits, you have to meet the NOx standard, period. And then you get into the traditional greenhouse gas that starts in 2027 and then starts to work its way through all the way to 2032. So the big issue right now is really that NOx rule. There is a lot of lack of information is probably the better word of what the cost structure will be there. We have heard different numbers batted around, but we have not heard anything that is concrete to say, here's how much a truck is going to cost you. One, either upfront, and then two, longevity-wise. So there are a couple things though that are potentially beneficial to the fleet. One is that you are going to have an extended warranty, or not an extended warranty, but the warranty period has to be extended. It is now a much longer period of time. So therefore, you in essence, in theory, should be able to bank on that truck not having as much downtime, or if it does, it'll be covered. But again, depends on where you are in the fleet. If you are a first trade truck buyer, right, you are like, I don't want any downtime, so I don't care if the warranty is great. Yeah, I don't have to pay for it, but I don't need that truck sitting off to the side. So that's one thing, but it does help you recoup some of that cost structure. So that'll be at least a positive from that standpoint. But ultimately, what everybody's concerned about is if the cost is high enough that people say that the fleets go, you know what, I'm going to bypass this particular regulation. I'm going to pre-buy as much equipment as I can, and then I'm going to then stop and wait and see what this looks like. The reality is that we don't anticipate it'll be exactly like that. So one of the things we can go back and we can look at history and say, what have they done in the past? Well, we have a couple ones. We had the 2002 regulation, which actually was 2004 that got moved forward to October 2002 because of some of the regulatory stuff. But so we can look at that, and then we have the 2007 engine mandate that happened. And so when we look at that, we actually saw a pre-buy / pre-build. And that's the difference here too, is trying to figure out, was it pre-buy, was it pre-build? That occurred starting about 4 quarters. It was a 4-quarter issue, but it was really started 3 quarters before the mandate. So the second quarter of 2006 is when it kind of started. And then it worked its way through into the first quarter of 2007 as the mandate hit. So if we look at it that way and we say, okay, we have something to leverage here to understand that, then we can make some better assessments. So that tells us, for at least FTR standpoint, that the likelihood that we see pre-buying and activity happening in 2024, 2025 is very limited. It's really a 2026, 2027 issue. And so what we've done is we've kind of looked at it and said, okay, great. Let's see what this looks like if we play this out. Well, you would then see a surge in 2026, and then you would have a noticeable fall off into 2027. The issue that we're trying to understand is, what does fundamental demand look like? And we're seeing that fundamental demand continues to slowly keep increasing as we move towards 2027. So the ability to quote unquote pre-buy is going to be very difficult because you actually are going to take those trucks, put them right into service just based upon the normal economic conditions. So the likelihood that we see a noticeable pre-buy is becoming more and more limited. But we could see where 2027 is where they basically say, you know what, I'm going to delay. I'm going to hold back and see what happens. So we have discussions with a lot of participants in the marketplace. There definitely is a buzz right now that says, look, 2024, 2025 could have pre-buy activity because people want to avoid this. Fleets are smart, and yet at the same time, they're not that smart to say, hey, I'm going to change my cycle this early. They tend to be more reactive to that. So yet at the same time, they're like, okay, I'm going to look at what is my cost structure for this piece of equipment? What's my residual value? What does that maintenance cycle look like? All of those things. But if you don't know if you need a truck next year or the year after, are you going to buy a truck this year? No, you're not. You're not going to gamble that amount of money, especially when interest rates are so high. So it's not like money is free right now where it used to be, where you could just go out and get money and you had no cost associated with it. So we believe that fleets are not going to be as aggressive in that respect as some within the industry anticipate. That was a very long-winded answer for your quick question.
No, and it's good because it is a complicated thing. You can't, there's all these factors, like you were saying, you can't really exactly predict. But it seems like you're thinking that, there will be some activity in 2026, some trying to get ahead of it, but mostly fleets will kind of operate as normal. When they need a truck, they'll get a truck.
Yeah, I agreed. And I mean, that's the thing for us is always been fundamental demand. Why do you buy a truck, right? It's to move freight. So if you don't have freight, then why are you buying a truck? And of course, when I pose this question to fleets, they're like, it's to make money. Like, are you making money? And then so the short answer is yes. They are truly there to make money, but you don't buy the truck if you don't have the freight to move. And that's the big thing. And so let me pose a question. Have you heard a number of what people anticipate the cost will be of a new truck with the 2027 mandate?
I can't say that I have. I think it's still a little early for that.
Exactly.
Right.
Yeah. So it's good to know that you have validated what exactly we are hearing to, which is dead silence.
Right.
So it's very hard to assess. So if you're a fleet, if you don't know what the cost is going to be in 2027, are you going to put $150,000 to $200,000 down on a truck because you want to get ahead of a mandate that you don't know what the cost structure is going to be? Probably not. I would think, if anything, they would just kind of hold off and say, I'm going to wait and see.
All right. Well, I think that is all I had to ask. So thanks so much for joining the show today. This is great.
Oh, man, thank you. It is such a delight to hang out with you, and I'd love to do it again.